All right, all right, all right. There we go. Got everything set up. Good afternoon, good afternoon, good afternoon, team. Hope you're all having a wonderful Sunday so far. Hope you guys had a good rest of weekend and you guys are ready for a wild week up ahead. Um, Let's catch up with our team. Good evening, Carl. Thank you so much for joining. I got an interesting list of analysis for you guys today. The markets are going to be hit with a lot of data, just like this week. We will get a lot of Fed speakers talking throughout the day, and after the Fed speakers, we also have CPI data to deal with on Tuesday or before the Fed speakers. Throughout the week, we have the CPI data on Tuesday, and then we have, Wednesday, and then most importantly, we have bank earnings that are going to affect the markets, and we just got to be very careful. Something that I noted right away as soon as I would pretty much when I was doing my homework today, going through all of the list of stocks that I usually analyze for the team, I noticed that there was a lot of tech stocks that was showing a lot of strength heading into this week. So what that tells me is I think we are going to let's take a look at when CPI data. Let me just confirm um, when is CPI data. Let's see. Team, what day is CPI data this week? Is it on the 10th? It's on Wednesday, right? Okay, okay, perfect. So yeah, team, we have CPI data on Wednesday. It is going to come out pre-market 1 hour before the market opens, and this will affect the markets on a major scale because we have had three consecutive positive CPI data reports, and this fourth one is really going to rattle the markets. So if that turns out to be the case, no need to panic. This will be nothing short of opportunity. So, what I would like to achieve with today's Sunday weekly watch list meeting is to let the team know that this is a firm warning that we are heading into a rough territory where we will see some selling. We will see some selling pressure, and I will try to uh, Sujatha said my voice, he's part robotic. I see. Okay, let me try to do something about it, you guys. Give me one moment, please. What about now, team? Is it better? Okay, perfect. So sorry, you guys. Uh, for today's session, I didn't want to scream into the mic, but um, hopefully you guys can hear. Hopefully there is no static noise. Take a shot at tequila. Honestly, okay, you know what? I'll give you guys an interesting in the last one I did, Ivan, honest to God, in the last meeting I did, but in this one I didn't because I would like to be very careful and very straightforward heading into this week. It is going to be an important week, and I really would like to get the team prepared. If I can achieve getting our team to be safe and sound heading into the next couple of weeks, oh my God, we're going to bank. We're going to see some beautiful opportunities. And you can see that from my chart, you guys. We already have the levels drawn up ahead. You guys know that. If we go back to any of my charts from the prior ones that I have shared, you will see that I had these levels drawn way ahead of time, way before this big supply bar appeared. So now that we have a big supply bar, this means that we have a level of resistance up ahead. And as long as this level of resistance on the S&P 500 remains intact and it does not get broken, this will send the prices down. And the way that it'll work is like, I'll show you another chart. In this particular chart, we have already lost the bullish channel, right? And we lost it with a big bearish breakdown candle. Now, if we go to a different chart that I have, let me see if I can pull up. On this one, we have a bearish rising wedge. So the way that bearish rising wedge formations play out, I'll show you a quick illustration. Give me one moment, please, team. All right, here we go. So the way that the way that bearish rising wedges play out is we basically see we see two converging lines that start out wide, and as price action goes up and up and up, those two lines converge, and we basically tighten inside of that formation. So what happens is we may be inside. You guys see, look how similar this is. You see how they had this big bearish breakdown candle. Although we regained the candle, they were not able to take out the big supply bar. The reason why is because there's a lot of buying orders, sell orders that are sitting there. So with that being said, I'm expecting this one to be a distribution. And no matter how strong bulls are going to step in, I think what will happen is like the bearish pressure is just going to overwhelm, and then we will see this kind of movement back down towards filling this gap here at 496, providing some nice opportunities. So how do I think this is actually going to happen? Before I show you some of the tech stocks that I'm bullish on, I want to show you where I think the big drop is even going to come from. So let's go ahead and look at JPM here. You see how JPM has a potential double top here? Now, this is perfectly fine. There's nothing wrong with that. But the problem is going to start once we get some candles here that'll test this supply bar, and they fail to break out. Even if they get a breakout, somehow if they end up with a wick, a shooting star, whatever that signifies, that bulls basically ran for the door, uh, this should be a clear signal that the market is it's pretty much topping out short term, and that we were enter a correction. Now, I really want to let the team know corrections are nothing short of opportunities. And for you to be a successful trader, to really beat the statistics and beat the odds and beat everyone else that's in the markets, other discords and so forth, we're going to really need to have the discipline for us to wait this market out. Wait it out, have the majority of our funds really safe, and just, like a monk, just kind of meditating and waiting for that big drop to happen. For example, I'll show us some quick opportunities. AMD is at 170. AMD went to 227, and now it's at 170. The fact we went to 227 means that when the stock gets any sort of news, any sort of positive sentiment, this is going to be the predestined target at 227. So that means wherever we buy, wherever we get to buy this opportunity, AMD shares long term, to basically hold for the long term for as many as 5 to 10 years, just like with NVIDIA, this would be such a great opportunity. And here's why, you guys. Even if we go from 170 down to, let's say, 145, remember, you are getting this big discount before the stock even splits. Imagine the stock goes on 5 to 10 years from now and has multiple splits. What splits do is, splits basically, it's like your stocks multiply and pretty much have babies, and now one stock share equals, let's say, 4 to 5 stock shares. So this is a major discount here, you guys, on stocks like AMD that are going to be the future. So what I'm saying here is to continue to be patient here, and oh my God, this is going to be worth it. Now, these AA mentioned this. These head and shoulders are all over the semiconductor. So if semiconductors do get a big rebound somehow, some way, then we will anticipate a potential sell-off so we can buy the dip. But considering the hype and the rotation that's coming into, the demand that's coming into AI, we may potentially not see that fire down. But if we do, that's a dream, you guys. Yeah, we may lose on our June expiration. We may take a loss on our June expiration, but the contracts that we will be able to pick up for, let's say, January 2025 or January 2026 at these levels of discount opportunity, oh my God, that'll be amazing. So I'm really watching stocks like AMD, and this is what I mean, you guys. Being patient just a little bit more can really pay off, because if we sell off a little bit more, the RSI also retests the 30%, which will signal a buy opportunity since we are in an uptrending market. So also worth noting that. So I'm really excited, you guys. So my goal for those that are here today, and for those that are going to be watching this recording later, here's what I'm expecting. I could even expect bulls to break out above 524.10 and get a breakout, a continuation. But what I can tell you for certain, over the years that I have traded and seen this formation happen over and over, you guys, this is not going down without a fight. Bears are going to get their big drop, and this is nothing short of liquidity coming to the markets. This is opportunity. We need that liquidity so that we get profit takers exchanging hands with new buyers, and this will continue to propel the markets higher, the bull market higher, especially with the 200 SMA line rising higher. I mean, you guys, some of you remember when we first were doing the mentorship class, you guys remember when the S&P 500 was still sloping down and barely was starting to slope up. And we were saying how, this is going to enter an uptrend. And now here we are. We have been in an uptrend for so long. And now not only did we already get one rebound off of the 200 SMA, it looks like we may even get another rebound in the future. I'm not saying we will fully get a retest at the 200, but even these gap fills. Now, the way that I see these bearish rising wedge formations in bear markets, yes, you will see them fully taking out the lower lows, but in bull markets, that's not the case. What we will end up seeing in a bull market is perhaps we will get it down to like maybe a 30% or 35% way through the rising wedge sell-off, and then get huge dip buyers stepping in right at that gap fill right there at 497. So team, this gap fill is going to be so key. And the way that they're going to do it, I will tell you right now, they're going to do it in a very sneaky way. They may give us a couple of green days, but man, this is coming right here. A big red candle like that is going to come, and this will trigger a short-term correction, and then boom, all of a sudden, we see buyers stepping in and so forth. All of a sudden, we see markets down here at the 490s, and we're like, wait a minute, what just happened? So this candle is going to get a follow through. Now, the way that we will get the signal that this is going to happen, I got the levels for you as well. But just going back to JPM real quick, let me show you how I think this is going to happen. So we already got one of the big bearish candles right here. We may get some sort of consolidation, and then what will happen is we will get a big bearish breakdown candle like that, where the candle will be massive on the daily, pretty much on the daily chart. And now you see how this sends the prices back down. So this is what I'm expecting. I'm expecting one of these big green candles to show up. And pretty much once you see that candle, that's when you see investors really backing off and really getting scared. So even the most bullish investors are starting to hedge. So again, team, we could see more upside. We could see some green. So let me go ahead and duplicate this and change this to the green color. We could see something like that where we'd see some upside. We would see perhaps another, like maybe a few more candles up, or even some candle consolidations. But eventually we may see another big bearish breakdown like that, where this will send the prices back down. And this is nothing short of opportunities. So if I go back to the S&P 500, what are the levels that we will be watching for if they do break down? So I have this level drawn here. If you guys want to go ahead and draw it as well, you can. And what we will do is I drew it on the daily time frame, and I'm going to go ahead and go to the 5-minute time frame. And once they break that on the 5-minute time frame, this will be the early signal for me that sellers are overwhelming and they're going for that drop. They're going for that gap at 497. So even though we are at 514, I would think that they are heading there ahead of time, and this level would be sort of my test. Now, if they lose this trend line here, this would give me an early signal that bears are losing it. What is my confirmation to short? It's 512.92. Team, if they break this candle right here, if they break this big supply candle on the daily time frame, this is going to get like basically massive selling. This will see massive overwhelming selling in the markets. And I swear to God, I have seen that so many times, especially in the past. When we see those rising wedges fire down, they're just not going to get out of it easy. They're going to get they're going to basically see some selling, and this will be nothing short of opportunities. So This is the rising wedge that I'm looking at here, team. These are the levels that I'm watching for. So as long as this supply candle remains heading into Wednesday's session, if the CPI data comes in hotter than expected, then this will likely trigger the sell-off. Now, let's say that the market kind of waits it out for earnings to come through. If the market comes through with earnings, then what will happen is yes, we will go back up, but what will end up happening is like perhaps through the Fed speakers here and there, the market will just start to sell off again. So, honest to God, here's what I think. Okay, team, I think heading into this week, Monday, Tuesday, we will see market green. The market will push up because the market always pushes through the CPI data. Now, the concern comes in after Wednesday. After Wednesday is when the markets can really start to turn the other way around and start to follow the weekly candle. So let's take a look at the weekly chart. We just looked at the daily chart. Now let's take a look at the weekly chart. Why am I getting our team to stay out and wait for opportunities to show up? This is the weekly time frame, and we have extended so far away from the 20 EMA line. And when we extend far away from the 20 EMA line on the 5-minute time frame, team, what happens? Do we buy calls here? We don't buy calls here, right? What we do is we wait it out until we get that correction towards the 20 EMA line, and that's exactly what we're going to do here. We have a bearish engulfing. You see, this was a weekly candle. This is a bigger red weekly candle that closed the week below that. And what I think is going to happen heading into the end of this week is bears will try and come back to take out that wick and basically fill that wick down and break down below 512. And once we get another red candle on the weekly time frame, that's it, you guys. We will start to see, we will really start to see de-risking in the markets where the algos will start selling all the way down to retest at least the 20 EMA line. We have, I mean, what happened on the S&P 500 over the last year? We had this rally from, began from the bear market breakout from pretty much from the 350s all the way to 458. And then we came down, we consolidated here, digested, held the breakout, turned it into support with a bullish engulfing. And ever since then, ever since last October, we have been in this run up. We have been in this consistent uptrend market, and we are finally starting to see some selling. And the selling all makes sense, you guys, because the Fed is starting to see hotter CPI data. We are starting to we're also starting to see energy costs go up as well, which is another detriment on the CPI. But most importantly, you guys, if the Fed ends up keeping rates as it is and they delay or they do less rate cuts, the banks are what's going to hurt the most. And if we look at the banks, they're really not doing too good. They're definitely very overbought. You can see they are cooling off, and we're just so far away from the 20 EMA line. It just would be much better for them to come back down here, build some liquidity, and then go back up. So the stocks that are in XLF are, let's take a look. We got Berkshire, we got JPM, VMA, BAC, WFC. Now, some of the ones that I would consider buying a put on would be C. C is one of them that I'm looking at for puts. You can buy a put for July 19, 260 60 put at it's at 2.60 right now, but I'm pretty sure you can get that for much cheaper. You could even do, you can give yourself time and buy the September 20 60 put at 3.30 area. That would also be a good option. So if you want to take advantage or hedge with banks, this is a good time. Now, team, what is the best hedge in the markets to literally just stay out of the markets and wait those couple of weeks out? It'll be so worth it. You're going to come back to some amazing opportunities. Yes, sir. Yes, sir. Yes, sir. Kenny, that's very well said. That's exactly what's happening. So the way that they're gonna catch liquidity, Kenny, is let's go to the S&P 500. The way that they're gonna catch liquidity is like you see how on the daily time frame we are getting below the 20 EMA line soon, right? Heading into this week, there's a great chance that we will fall back down below the 20 EMA, and that will be the sell signal for the algos. And what will happen is, by us coming down here to 496, the 200 SMA line is still going to catch up. So as the 200 SMA line arches back up, this is going to be this is basically going to provide even more structure, because it means even if we don't rebound there, and let's say we come back down another leg up, this will behave as a pretty much as a demand for price action to continue to push higher, push back up above 524, and then create another high, the way that it was doing over here, pretty much over here, and over here, and now over here. So team, don't be nervous for this pullback. This will be nothing short of opportunities. So heading into this week, I will be cleaning up some of my positions. I'll try to get out of some semiconductor stocks that I'm in if they don't perform better. But if you have very long-term shares and stuff, please do not be scared of a short-term correction, because what you'll end up doing is you'll take the risk of a potential short-term correction. And what if that short-term correction doesn't even happen? What if the market will just ends up coming down to like 504, rebounding off of this support level and just heading right back up? This will be even more bullish for the market. But again, selling off more will be a better opportunity, because we get to buy stocks way cheaper. Futures look slightly positive at the moment. Um, and if for some reason Monday, Tuesday red, do you think that means a bigger downturn? I don't think that will be the case, Christopher. If we end up selling off, then I think what will happen is the market will probably use it as liquidity to go back up. Now, if sorry about that, if we do instead, let's say we consolidate here and we even go back up, or let's say they even break out above 524, but somehow turn into a shooting star and sell off, then they will sell off big time and go all the way down here nonstop. And finally, right over here, that's when they will probably get big bullish demand candles so that they can go back up. This will be an amazing opportunity if they do. But so far, team, before I go and cover other stocks here, do we have a good sense of what to do for the next 2 weeks? For the next 2 weeks, we're going to avoid the markets, okay? We're going to wait it out and not buy short-term, especially short-term expirations. Oh man, they're gonna get butchered here. Yes, Kenny, observation mode. This is what I'm talking about. Observation mode, you guys, okay? Enter observation mode, get your popcorn out, and don't participate in the markets. Wait for the big opportunities, because there's going to be so much IV elevation heading into this earnings, and it's all going to get shut off. And once they get shut off, oh man, the contracts are going to get very cheap. Uh, so let's cover, now that you guys have a good sense. I also do want to encourage some contracts here. So if you want to buy some SPY puts, which are clearly high probabilities, you can go ahead and pick up, let's say, a June expiration. You can pick up the 500 put at 6.0. You may even be able to catch it a bit cheaper, but I think this will be a good contract for June 21st. Gives you 75 days, which is plenty of time. And this has the potential to go in the money if we do get a big sell-off into CPI data and then heading into next week. So if they get a candle close this week below 512, and let's say they get a candle, they close the following week anywhere below 509, that's a very clear signal, team. That's a very clear signal that market will see more downside. Yes, sir. 500 put for June 21st. So 500 put for June 21st. This will be a good hedge opportunity. to pretty much also take advantage of this downturn. So you can buy this heading into Tuesday or Wednesday session. I would say, yeah, sometime into Wednesday, or even you could buy it even on Tuesday, but I really doubt you'll take a big hit. I think the contract is going to hold value until we really break resistance at 524. The fact that we have so much time is just really amazing on this. Now, if you want to do something shorter term, you can do the May 17, and you can also do the 500 put for that one for May 17. It's trading at 3.50, and I'm pretty certain that you could probably get it at 3.0 this week. So, team, for today's session, I actually went in reverse. I talked about the bear side first so that I can get us prepared, because my concern is not that we're not going to take advantage of this week. My concern is that we will take advantage of the week, and then our traders will, because there's a late reaction in, in the Discord and stuff. When traders see us profiting, then they're going to start participating, and just as they start to participate, they may take the big hit where the market takes that big drop. So we don't want to do that. We want to be aware that after I show you today's analysis, they're all momentum trades, okay? They're not meant to be kept longer. They're momentum trades for us to just take advantage of Monday and Tuesday, and that's about it. From there, we go into observation mode, or even try to take advantage of a potential market downside, because that's the downside here is low risk, and the pretty much the upside here is the high risk. So please do keep that in mind. We are not right here. We are not right here. We are not right here. We are much higher. So probabilities of a correction is very high, especially as we get close to losing that 20 EMA line. So we talked about the S&P 500. Let's also, and again, team, let's take a look at the weekly chart as well. Let's not forget the weekly chart. We are very overbought and away from the 20 EMA line. So we have a bearish engulfing on the weekly time frame. So if the next week also closes red, this is going to be a confirmation that there's more downside to come towards these levels here at the low 500s to 497. All right, now that we have talked about the bearish side, let's go ahead and cover some bullish. Yes, sir. So, team, as Chef Mike said, for those with smaller accounts, don't feel obligated to play if the expense of the contracts are too much. It's best to wait. You guys, I can't emphasize this enough. This is literally the absolute best thing you can do, and I love Mike so much for the fact that he understands this. I really I admire that, you guys. Wait it out, avoid the markets. This is literally the best thing you can do, because what will end up happening is, even if you end up participating, you will somehow get sucked in on some short-term calls, and before you know it, by the end of the week, you are down a lot of money. But if you wait it out, you are basically you're going to come back to some amazing opportunities down here, where the market has already came down over 2 to 3%, and that'll be really good. So Chris, he actually made a lot of money last week. He encouraged us to come back to the zero DTE. I was very happy to see that. I think he made like 40% or something just on Friday. That was really nice to see. You guys are nice. All right, team. So hopefully the team got a good understanding as to what we can expect heading into this week. Now that we have discussed this, and I also want to mention, you guys, I was gonna make a joke, Ivan, a follow through joke, but I'm just going to leave it out. You guys, here's what I think. The market will come down, but remember, they're going to come down and go back up really, really fast. So it's going to be nice. Honestly, it's going to be some nice opportunities for us to really wait this out. And now that I have discussed this one, let's go over some goodies that I got for you guys in regards to bullish momentum trades. So the first one that we're going to look at is Now Services. Now Services has been consolidating here over the last two months here, and despite getting this big bearish breakdown candle, bulls are pretty much resilient, and they're not going below that. They're not closing below this bearish supply candle. So I'm going to go ahead and draw this resistance line at 789. And if they do get above that, then this is a very clear signal for us to take advantage of this breakout. So you can even do that before that, before we even get above 789. You can enter the trade as soon as we break above 785 heading into this week. So on Monday, if we get above 785, then our target is going to be 807 by the end of this week on this bullish momentum trade. You can see that the TTM squeeze has flushed the selling multiple times now, with bears unable to get any sort of confirmation close below pretty much below the white 20 EMA line, and we just continue to hold really well. So now that we have a demand candle, a bullish engulfing candle, and we also have volume, the TTM squeeze looks good. I'm targeting 803, 807, sorry, 807 for this particular. Actually, 805 is fine too. So my target for this bullish momentum trade is 805. Now, let's go, and you can trade this with either, you can trade it with shares, you can trade it with options, however you decide to share it, that's on you. Sorry, traded. Now, another bullish momentum trade that I got for you guys is Netflix. You guys, this looks beautiful. You can see we had a bear, sort of like a red candle that almost tried to take out the breakout, and they were not able to. What ended up happening is we got a gap up, and then bulls pushed all the way up throughout Friday's closing session, closing above all of the candles above that breakout. So again, Netflix bullish momentum trade idea above 634.07, which is this level right there. And team, this is a very high probability day trade for this week, heading into Monday session. You can trade the stock as soon as the Monday's market opens for a quick bullish momentum trade. Netflix has had a strong demand over the last couple of months, and we can see we had a lot of gap ups. And just recently, in the last 6 weeks, we have been digesting really well inside of, actually above the 20 EMA line, inside of this consolidation zone. And we have been cooling off. So now that the cool off is pretty much, the cool off cycle has matured, bulls are finally overwhelming bears again. Demand is overwhelming supply, and it looks like we are going to get a big green candle on Monday or even Tuesday's session. So so buying ITM, Harley, ITM might be a bit expensive. But if you have a large account and you can basically you can trade it, then do it by any means. However you want to trade the setup, you guys can trade it. But just know that if, let's say, you traded with like a weekly expiration or 2 weeks out expiration, you could buy wow, they're so expensive. This is probably they yeah, they have earnings coming up. So you could buy, let's say, April 12, right? And you could buy, let's say, the 645 call on discount into Friday's session on a slight pullback or something. And then this contract will, as soon as the market pretty much continues and gets that breakout the way that Amazon did, this will continue. This will basically print and provide like a 70 to 80% profit within that given day. So that'll be really nice. Netflix already almost at 638. I see. That's good, you guys. Even if it stays around that area, I think it'll be a good opportunity, because what will end up happening with this setup is I think despite them getting a small sell-off, they're going to come back up with a strong demand and just rip right through the resistance level. So if that happens, you guys got the opportunity in your hand. Now, another one is Meta. I'm telling you guys, when I was looking at everything in the market, I couldn't find a single other stock that looked bullish. But when I looked at when I looked at the other tech stocks, tech stocks overall, I was like, oh my gosh, this is insane. Meta as well, we are getting a breakout, a double bottom breakout above 514.6. And they're pretty much they're getting above. As soon as they get above 530 on that wick right there, they're going to get another green day or two. And we can see the volume has been catching up, the TTM squeeze, the RSI, everything about Meta is looking bullish. So this is going to get another green day on Monday and possibly heading into early Tuesday. Now, another stock is Microsoft. Microsoft bullish momentum trade as well. We printed a demand candle taking out the prior supply, and this is sitting right at the support of this bullish channel here. So we have been consolidating really well, and we have been also cooling off. You can see the TTM squeeze cooled off, and what happens sometimes, like the TTM squeeze will cool off, and we won't see basically we won't see a sell-off. So the way that for example, we can see right here, we got a rally and then we had a base, and during this base the TTM squeeze was cooling off, but it didn't flush to the red side, to the red. And sometimes, actually not sometimes, very often, they do that, and this signifies pretty much a squeeze transition where the trend just continues to go higher. So we have a rally, we have a base, we have a bullish demand candle, bullish engulfing, and it looks like we are likely going to see another pretty much a move towards 430 and maybe even a breakout above that heading into early Tuesday morning. So Microsoft bullish momentum trade potential. And it's all in your hands, you guys. I will also trade it as well. If I do trade it, I will probably have to trade it with short-term expirations just because the contracts are so expensive. But the fact that I shared it with you guys and now you guys understand why we would buy it, um, you guys will be able to adjust the risks accordingly as well. You guys won't go heavy, so I'll be a lot more relaxed. But this is good. So far, this is looking good. And the way that we could do it is we can even buy something for May. Let's say we buy the 460 call for May and just sell it for like 30 to 40% when the market goes up and just secure our profits that way as well. However, we take advantage of it, whether we buy something, let's say, much longer term expiration, whatever your trade style is, however you trade, the opportunity is in your hand for this bullish momentum trade. So if you, let's say you trade shares, right? Let's say you're one that trades shares. You can buy Microsoft shares tomorrow morning. Let's say anywhere around this level here, anywhere around the 30%, even 30% retracement, and just hold it for a bullish momentum push towards 428 and 430 area, and then sell it that same day for some really nice profits for a day trade. This is also good if you guys trade shares. Always amazing opportunities. Yes, sir. Get in, get up, and get out, pretty much. Get up, get in, and get out. That's perfect. I love that, Chris. Keep it very simple, okay, you guys? And here's the beauty. These bullish momentum trades, every week we have a different setup. So there's no reason to be attached. We will just catch another one next week or, next day. So yeah, these are my bullish momentum trades. And if you guys noticed, all of these stocks came from the tech sector. Tech are looking very bullish. Financials have earnings, so I'm anticipating traders, investors to be de-risking, and this will in turn benefit the tech sector because rotation will flow into this sector. That's all for me for today, team. Are there any questions? Oh, I gotta cover Nvidia for Jason. I'm also going to go over my top list as well really fast. So Jason, I'm looking at this bullish falling wedge formation on Nvidia. I think regardless of how this week will play out, I think we are going to get a move on Meta heading into Monday and Tuesday, where we get this bullish falling wedge fire to the upside. And the first line of resistances that I'm watching for is if they break. Here's what I tell you, Jason. If Nvidia heading into tomorrow's trading session, if they break this level here at if they break this level here at 884.11, you can enter a basically a bullish trade, anticipating that Nvidia is next going to go to 903 and then 921 right here, 922. So um, I'm not saying that we will instantly go to 922, but my first line of resistance, the first overhead resistance, which is also the 20 EMA line, is sitting at 904, 903 area. So, Jason, for NVIDIA analysis, the level that I would be watching for NVIDIA heading into tomorrow's trading session is this consolidation phase from 875 to 884. If they break above 884, you can take a quick day trade advantage of that resistance breakout, knowing that momentum is going to be strong, to for them to take out this big supply candle and head towards 904. Yes, sir. Would you consider Tesla into earnings? Honestly, I would like to stay out from Tesla for a bit more. If anything, Harley, I really want to short Tesla. Like, I don't want to short it, but at the same time, if anything, I would encourage the team to continue to short this. I don't want to say it, but dog water stock. Uh, I think bulls are definitely starting to show up, but it's just not strong. And the reason it's not strong is because it just feels like they're heading towards this predestined target of 152.53. Yes, sir. I agree. I agree. So it just to me, it just seems like Tesla is heading towards 152.53. Now, don't worry, team. I will get us back into Tesla in the future. It's just not going to be anytime soon. We want to see we want to see some updates with Tesla and the board. I watched the Apple movie. You guys, if you haven't watched the Apple movie with Ashton Kutcher in it, I really would encourage you, because when you watch that movie, you will finally understand why Elon Musk is asking for the 25%. It will make perfect sense because what's happening at Tesla is pretty much what happened with Apple back then when Steve Jobs got kicked out. So how could Steve Jobs be the founder of Apple and somehow he gets kicked out? It's for the same reason that Elon Musk is feeling threatened and wanting to get more control so that he has more, more basically more power on his end to do things. If you guys watch that movie, you'll understand what I mean by that. So it's the Apple movie by Ashton Kutcher. It's a Steve Jobs biography. Sorry, not an Apple movie. It is an Apple movie, but it's a Steve Jobs biography film, and I loved it honestly. What would be the target for Nvidia? How far? Okay, so for Nvidia, it's actually not a momentum trade. Unfortunately, this is just a reversal trade at the support. At the near support. This is not a bullish momentum trade, but I do want to note something that I really love about Tesla is this. You guys, let me show you in how long this stock has not reset its TTM squeeze. Ever since October, ever since December, I'm sorry, ever since December, we can see the TTM squeeze did not flush and reset to the red on the downside at all through this entire run. So the fact that they flushed the selling and there is no selling, this itself is impressive. So if this bullish falling wedge does fire heading into Monday session, now here's what I want the team to do. Here's what I want Jason and Sujatha, you as well. Avoid Nvidia and only trade it if they get above 884.11. because only then, if they get above this level, is when the algos are going to just crazy buy it to try and get it towards 897 and then 904. So it's not really a bullish momentum trade. It's a simple breakout above this key resistance level at 884.11. Now, if they do get back below 884, you can have your firm stop loss at 880 and just walk away and detach like you didn't even lose money. Even if you lose money, screw it. Detach away from it fast and just understand this is for the better. You will catch it much, much cheaper, and you will be able to catch one of the best stocks in the market for an amazing discount. So nothing wrong with that. However, at the same time, to not miss out on this opportunity, if they get above 884.11, that's your breakout trade right there. All right. So we talked about NVIDIA. Our trader wanted to look at PLTR just really fast here. So PLTR is not looking good. It has a head and shoulders, but I would say that they are definitely digesting here. But I will say this is a head and shoulders, and I would not be if the market does pull back. I would not be shocked if this stock did pull back down to basically the 20 level. Now, the war is still going on, so we'll see how PLTR behaves here. But honest to God, it's not in a position where I would buy a call on VRT. I was actually looking at VRT. Um, this stock is just beasting still above the 20 EMA line, but again we do have the topping process there, so will be interesting, you guys. I'm not sure about this one. Let's take a look at what kind of company it is, what kind of rotation. Oh, okay, it's an infrastructure. That makes perfect sense why it's up here. It's just like Cat, same setup as Cat here, but Cat was a bit stronger. Honestly, infrastructure stocks are continuing to get more upside because Biden just passed an infrastructure bill recently. So this could be why the stock is getting more upside. Uh, but I do want to say that the Dow Jones is not really doing too good. The Dow Jones is actually looking quite bearish here, and it could get more selling to the downside. So if that turns out to be the case, let's say we come back up to 392 area and so forth, and we continue to reject at 392.66, I would anticipate Dow Jones to create a head and shoulders here and then sell off back down to 374 and then get the bot from there for the long term. Um, all right, team, that's all for me. Marvel, let's take a look at Marvel for Miss M. Marvel doesn't look too bad. It does not look too bad at all. It has a head and shoulders as well. It has a head and shoulders, but so far bulls are showing up, and they're still defending those they're pretty much fighting those bearish engulfing candles and consolidating at the support level. So they're still not doing too bad, but we do have a head and shoulders. So if that turns out to be a head and shoulders, then this would mean that we could sell off as far down, honestly, as far down as these levels here at 50, or even fill the gap at 47 before we finally see buyers show up. Now, if we do see a consolidation and they come back up above 73 and push towards 75, I would take that as a bullish signal that bulls just had a higher high and then went on a big defense, big correction mode, consolidated really well, did not make this a lower high, and instead they're gonna go back towards 86 and then push higher. So getting more data here will be key for Marvel. A lot of these stocks here that are sitting at these levels need data, but I'm very certain with where the market is, they might get another leg down and possibly sell off, but not particularly Marvel. I'm not sure about Marvel because the setup does not look too bad. but I will continue to watch it. If I see, let's say I see a big bullish engulfing candle coming back up, then I would be bullish. Now, let's say even if you do end up trading Marvel heading into Monday session, what you can do is you can have a stop loss at 71.30. If they get below 71.30, take that defensive stop loss, walk away, and just come back in another time when they come back in with a bigger demand candle. Team, we want to get in. We want to get in when we get these massive demand candles. When we get demand candles like that, demand candles like that, this is a good setup for us to get in. So when we get these very clear candles, they tell us that the market is ready to push up. We saw it right here. These are the candles. So if I'm looking at, let's say I'm looking at a bullish momentum trade, right? If I'm looking at a bullish momentum trade, if I look at it now, it would be a little bit too late for me because the 20 EMA is already coming down and we have already gotten the big move. So when would it be a time where I would call it a bullish momentum trade? Here's when, okay, team? Let's say we're right at this resistance here, right here, or even right here, or let's say this resistance here. These are all momentum trades. And the way that we trade them is as soon as they get above that, we buy, and depending on where they're at, if I buy, let's say I buy a long-term contract right here, I would buy a 2025. Even though this was 2023, I would buy a 2024 or a 2025 call. Now, for a particular bullish momentum trade, this would be a starting trend. Actually, it wouldn't be a bullish momentum trade. This right here is where was it? Where was it? When we start to see this sort of movement, this is when we get the bullish momentum trades, because now we have a solid uptrend on the 20 EMA line, and now we are starting to see the expansion and then the contraction back down. So this right here would be a bullish momentum trade on that particular candle. Why is it a bullish momentum trade, team? Because we already got a demand candle back up above the 20 EMA line. We are above the 200 SMA and the 20 EMA line. And if I saw this green candle, I would enter the next day at a break, 1 penny break above 59.05. And my first predestined target is always going to be the resistance level up ahead, and then followed by a higher high. Now, once I get out of, let's say I take advantage of this nice trade here, what I would do is I would let it do its thing, create a bunch of consolidation, and I wouldn't get in on this strong setup, on this gap up, because it went up too much. Maybe I'll wait it out a little bit to see what would happen. The more you wait it out, the market is always going to give you these amazing opportunities. When I would get in is this demand candle right here, you guys. Once that demand candle gets printed, why am I going to enter right there? Because this tells me right there, this is a clear bullish momentum, and this is going to expect expansion. Now, I don't care what happens after the expansion. All we care about is the fact that we take advantage of the expansion. So even if it's 1 to 2 days, that's all we care about. So when I say, hey, you guys, I'm going to be trading Netflix, or let's say Microsoft, or whatnot, heading into tomorrow's trading session, Monday and Tuesday, what I mean is I'm just going to trade it for those 2 days and take advantage of it. Now, what happens after those days, it's going to be less important to me unless the setups are still really there. So if we look at Netflix, let's say, what was the other one? On Netflix, we looked at a few others. We looked at Meta. We looked at Now. We looked at Microsoft. So these kind of stocks, you guys, these bullish momentum trades, you just want to take advantage of that particular day, or pretty much even the next day, and then get out if you are greatly profitable. Now, there are times where maybe the setup will take a bit longer and you'll wait it out. That's perfectly fine, but just don't keep them for too long, and don't average down on these trades. You pretty much you profit or you take your loss. Now, why is it important that we don't average down? The reason why is because we already have a high probability off of our scanner. So the fact that we are finding these setups on our scanner, it's already giving us a probability edge. We just don't want to mess with it by messing up the sizing of the positions. Now, keep in mind, this is for bullish momentum trades. Okay, team. That's it for me. I'm gonna go ahead and pass it to Rain Bond, and I'm very excited to hear what Rain Bond's got for us, team. Now, team, really quick, for Apple, I didn't mention Apple. Apple just needs more time. Okay, team. It doesn't. It's honestly not. It's not. Like it's not. It's not going down and it's not going up either. It's just been consolidating and needs more data. But the more time it spends up here, down here, team, the better it is for the bulls because they're establishing further support at this pretty much they're going to actually confirm it. This will be a confirmation here, and if they confirm it and finally get a big demand back up above 178 to 180, that will be a very bullish double bottom. So let's see what Apple does here. But honest to God, you guys, I think like if you have, let's say, August positions, you have January 2025 positions, I would be very confident to hold us with not much to worry about, because even if we do take a little bit more downside, they're eventually just going to bring it right back up to this magnetic support level. Back to you, Rainbow.
Okay, sorry about that, body. Can you hear me now?
Yes, we can.
Okay, so I'm gonna go over my analysis here. Um, Thank you very much for your amazing analysis as always. I'm gonna quickly go over mine here. Actually, pretty much looking similar to your analysis. I'm looking into honestly, the bullish and bearish case here. So right now, let me go on my hourly time frame here. All right, team. I hope everyone is having a wonderful weekend so far. And we actually have a big week coming up next week. We have, as Body mentioned, we have bank earnings going into April, as well as we have CPI data coming up this Wednesday as well, which can definitely trigger some momentum in the market right here. So looks like as we're looking at the daily time frame here on the SPY, it is still trading inside of this uptrend channel on the daily time frame. And the reason why I did update my trend line here to establish this. Okay, let me just go over here. Okay, so basically this is the pullback that we had on last July of 2023. So from here, we had a pullback, and as you can see, we turned that into a bull flag pattern here on the daily time frame. And this is basically the breakout level right here at around 430 or 440 levels of this bull flag formation. And that's the reason why I kind of redraw my trend line here to confluence this lower trend lines here. So we have that first touch from this breakout level, and we have the second, and now we're reaching the third touch here on the trend line retest of this uptrend channel. So I'm gonna go over the bullish and bearish case here as far as the price levels. And so let me zoom in here so you can see the levels clearer. Okay, so once again, as you can see, we did get a major flush, rug pull right at the resistance, overhead resistance at 523.87. And from there, we had a big flush below the 20 SMA line, retested 513 support. And as you can see, we had buyers stepped in. We gapped up above 514 the next day session on Fridays, and we reclaimed above 516. And once we reclaim 516, that's the daily 20 SMA line support, which is a critical support here for bulls to continue to maintain a structure here, our uptrend structure, a higher low support to continue this uptrend channel on the daily time frame. So as you can see, buyers once again stepped in. They closed above the 20 daily SMA line on this daily time frame. And that's as far as what I can see here on the bullish side. We have this broadening formation here. We're right at the third touch here on the daily time frame as well. So this is some critical level here that we're looking at for any trend continuation and upside trend continuation or trend reversal here on SPY. So I'm looking into for the trend continuation perspective. So my analysis pretty much remain as the same, the last analysis. So as long as buyers maintain this higher low structure here above 516 at above the 20 SMA line and regain above 520, this could lead us for further retest towards overhead resistance right at 522 to retest this major resistance here on the daily that's been established at 523.87. If we do break this level, I think we're gonna head for another expansion towards 527 to 530. This is just for the bullish case if the CPI data does positive, as well as banks going into April. So you see, that's what I'm looking at as far as for bullish side of things. But as you can see, we are definitely right at a critical level here of support. So if we see continued weakness here on the S&P and we get a follow through candle of this bearish engulfing here on the daily time frame, we are looking for a trend reversal once we see a follow through right below 513. Once 513 is broken, we're breaking right below the 20. We are breaking right below the confluence of uptrend line support, and we are likely gonna head to gap fill this level right here at 509.82, and below it we are looking for further weakness to retest the 20 SMA line, 50 SMA line on the daily, which is right around 507 to 505.24 from this breakaway gap right here on February. So if we do see further weakness below the 50 SMA line, below 510 and 505, once we lose 505 level, if this support or daily support does not establish, then we could see further downside to fill this gap right here, right at 497.31, once we lose the 50 SMA line support on the daily. This is just what I'm watching here on the daily perspective on the bullish and bearish side of things. So I did mark it down here above 516. Will remain bullish towards 522 to potentially break this supply candle right here at 523.87. If this candle doesn't break it out and we see instead a lower high structure on the 4-hour chart, if we see a lower high structure right here retest around 522, then we may see a potential head and shoulder pattern here that is forming on the 4-hour time frame. So if let me just something like this, where we get this first lower, we got the high and we get a lower high below this level right here. And the break of this level is a very key level, critical level of support right here for bulls to maintain and or we can head for further downside to correct towards 505 from here. So yeah, that's what I'm watching for the bearish side of things here. And I do have some stock that I'm looking for as far as for both directions, for bullish momentum play as well as for a potential correction play. Let me just go over it here. See if there's any. Yeah, I'll go over. Oh, okay. Sorry. I do want to mention also on the weekly time frame, we also have a potential hangman pattern here on the monthly time on the weekly time frame. So if we do see that follow through drop below 513 within the next coming week, then we're gonna anticipate those further pullback, breaking this uptrend channel, establishing further support around 505 and 497 levels, fill those gaps from there. Basically rolling over to the 20 daily 20 weekly SMA line. So that's what I'm watching. The TTM squeeze so far is cooling off, but the only thing is that we did have a spike on sell volume, so it definitely going to be a critical level for next week or headed into next week. Let me see. Okay. Body did mention some great bullish momentum play. I do have Meta also on my watch list. Let's see. Okay, so I'm gonna go over first as far as a bullish momentum play that I'm looking into within the next coming week, going into April. Is the one I'm looking at is actually I'm looking at CGC for bullish momentum trade. We're looking into share long opportunity for shares for this stock. So basically, CGC is one of the largest cannabis producer in the world, and I'm liking the setup right here on the TTM squeeze. We have not seen that squeeze really fire to the upside yet, and I'm seeing some really nice volumes coming in here on the weekly time frame. So so far on the weekly here, oh sorry, let me go on my daily chart. So far on the daily right here, we're seeing some digestion here above the 20 SMA line support, and I think we can get further expansion here um, once we reclaim above 11 and break 11.60 as confirmation. Once we break 11.60, I think we could head for this gap fill right here at 13.52 and retest this previous lower high structure right at 19.12. Further strength above this level right here, then we are looking towards this gap fill right here at 27.40 level to retest this previous major lower high right here at around $30 to $32 for a CGC. So far, I'm honestly liking this setup for a long-term play, bullish momentum play going into next week or next coming week. So, and see, and Meta is also part of my watch list. I'm going to mention that a little bit. I know Body already went over this, but we are currently consolidating inside of this bullish ascending triangle on the daily time frame. Looking for a bullish momentum play here for Meta. We have that nice double bottom pattern, and we have a higher high above this high right here at 527.40. We broke a new high from there, and as you can see, buyers stepped in at the retest of this previous resistance at 514.19. And so far, we are looking good for expansion towards 537 area to 550 for Meta. And as you can see, the TTM squeeze is transitioning into solid green bars here. So I think this could really fire some fuel to the upside once we reach that 70% RSI on the daily time frame. So that's one also that I'm watching. I know Body already mentioned that, but I do want to also mention that this would be a good momentum play if market does get some positive news with CPI. And let's see what else. All right, so for the, let's see. Okay, for any market weakness, the one I'm looking into hedging is gonna be coin put. Let me see. Yeah, so far right here, looking into potential any market weakness heading into next week, uh, any negative uh, insight on the CPI data as well. I'm gonna look into getting into coin for short opportunity below 240. Once 240 level is broken, we're likely to have this retest this previous low right here at 236. 236 will be our confirmation for to retest this daily support at 216.31. And what I'm seeing here in coin is uh, we have kind of similar pattern as this right here. We had a head and shoulder pattern. As you can see, we retested the 20 SMA line. Buyers couldn't hold or couldn't accumulate above it. As you can see, we had a breakdown back to retest the previous resistance, now turned into support, and we headed higher from there. That's kind of the same similar scenario as what I'm looking into right here. We have a potential also head and shoulder pattern here on the daily time frame. Our stop loss would be, as far as conservative wise, is going to be at 262 or even 260. As long as we don't break that level, that's a potential lower high structure to retest this support right here. And potentially once we break this right here with further weakness, we are looking into this gap fill right here, right at 206.32. And below it, we are retesting this previous resistance right here, right at 180, 187 area at the 50 SMA line and the 100 SMA line on the daily time frame. So far, this is what I'm watching also for next week for a potential short opportunity for coin. The contract that I'm watching for this one, since they're quite a bit expensive, we're looking into the June 150 or even the 160 put for a 2 to 4 week swing trade for this one. And if our stop loss would be, as if we wanna do an aggressive stop loss, is gonna be at 255. For a more conservative stop loss is gonna be at 261 or 262 for coin. Um, yeah, so that's what I'm watching as well for next week. Let me see. And Body already mentioned banks as well. Let me see. Okay, I'm gonna go over a little bit of the XLF sector. So we have this rising wedge pattern here on the daily time frame. We broke below the lower trend line support, and as you can see, buyers did stepped in at the 20 SMA line support. So as long as they don't regain above 42 for XLF, we may see further downside here or further correction towards this level right here at 40.20 at the 50 SMA line retest. And if we sense further weakness below it, think we're headed towards 39.20 and then retest this previous breakout level right here at $38 for XLF. But we do have earnings also coming up as well. So what they could do is they could just turn this into a digestion zone. We can further digest here. Even if this supply candle is placed here, we can just if as long as they stay above 41 level for XLF, they could even either digest this move for further upside into earnings, or if they do break below 41, this is a distribution for a potential head and shoulder pattern down to those levels that I mentioned for XLF. But yeah, so far that's pretty much what I have on analysis or analysis team. I don't really have any. I could not find any other stocks on my watch list here on our scanner. Those are the ones that I'm really keeping an eye on for now. Um, me see if there's any. All right, so let me go over it quickly for IWM. Oh, give me a moment. All right, so for IWM here, you see, give me a moment, team. I'm just fixing my chart here. Okay, so we're looking at IWM here on the weekly time frame. So far, we are currently rejecting this resistance or previous resistance right here at 212.40. As you can see, we did had a retest last week off of that level, and this week we had a reversal back down to retest 203 level for the daily support. Honestly, as long as we continue to hold above 199.42 level or 200 psychological level for IWM, I'll continue to hold our play for longer term uh, to to break this resistance right here above 212 towards 219 and 226 area for this retest at the previous lower high structure. If we do see a retest to 200 or 199.40, we are looking into adding another position if we need to. But so far, honestly, we'll just hold on to what we have for now, as long as we still have time on them. We'll wait until how the setup works out within our direction for the next coming weeks. What they can do is they can even form a digestion here, similar to this one. So they can even form a potential digestion here for IWM with support right at 197 or 196.80 area, and resistance right at 212.40, and just trade trade from support to resistance levels there before we head for further upside for IWM. So as long as they can stay above those levels, then we are looking into further for a rally-based rally setup here on the weekly time frame. Hold on.